Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, new month. I tend to think of things in terms of weeks, though. We're working on 90 room handles this week. So the next couple of days are going to be about keeping what we have. Although we just got into a really nice short against the pre-FOMC price yesterday, 28, 29, 25. So we're short around 28 here. The bulls had a real chance to take it up and over, but they stalled where I was wondering if they were going to stall, which was the 9-day simple moving average. We talked about whether if they could take that out and convert it into resistance. If they can take out the potential matching lows down here at 28.13, which is where we got long yesterday for a really nice move up. Booked profits on that, took our runners off this morning. Now we're short from 27.75. Working against 29.25. You can see we're moving down into the 21s. If they can somehow take out these matching lows, and matching lows have been the absolute thorn in the side of the bears for many, many months now. And that's why when they came about yesterday, even though we had pretty much resigned ourselves at the time that we weren't going to trade anymore, I mean, we were working on a 30 handle day. We're like, oh, well, if they're going to do that, we're going to get in. So we had a long area against 13. We got in about 16, and off it went. So as we head into today, the 9-day is big. It's sitting there at right around 28.39. 13 down below is big. If the bears can convert 28.13, then really all that's left to do is head down towards the daily mid band, which is right around the 2800 area. We have a new monthly pivot today. It comes in 27.9308. That could be interesting if it's seen at some point. But right now the key is you've got a pre-FOMC price at 28.2925. As long as that stays resistance for the day, then the bears are free to go ahead and take a look at 13. The risk is anywhere between here and there, the bulls can create a higher low. And if they can get over the top of the Globex high, then we head back to the weekly pivot. Okay. So that's, it's pretty simple today. It's pretty simple today. Certainly if you're a subscriber, you've got to be thinking about, keeping a fantastic week, building upon a fantastic month, 220, 230 handle, room handles for January. So a nice way to start the year. So we're going to be, picking our spots today, but certainly looking to see what some of these bigger levels are able to do. This is the best the bears have looked in many months. That includes, December 29th, where we had a big down. This is the most consistent the bears have looked in about 6 months over the course of the last 3 days. The other thing I told everybody yesterday was this. Nothing has really happened on this daily chart. Let's go back to it. Nothing's really happened on this chart that is at all bearish. Okay? Here's your daily midband, which is the true long-term test of whether we're still in a buy dips market. Doing this kind of a ramp job up to the bet the house level, which we hadn't hit in a couple of years at 28.74, which didn't call the top, but I'm not in the business of calling tops. I'm in the business of booking handles for subscribers. So we were in at 74. We took a little bit of heat, and close enough is good enough. If we come down to the green line here, chances are the dip buyers will step in, and then it's up to the bears to see if they can convert this line. If they can't, then all that's happened here on an intermediate to longer term time frame is we have taken profits, reverted to the mean is held, we remain in a buy dips market, and it stays bullish. Now, if the bears can convert the green line and turn it into resistance, then we end up in a sell rallies market. And all we do here is we go down and we say hello to the daily lower band. Okay? None of that is really bearish at all. When you back this chart out, nothing's really going to get bearish unless we start converting things like the 50-day exponential moving average, the 100-day exponential moving average, The 200-day exponential moving average is the ultimate determiner of whether for me, we're in a bull or bear market. Okay? So I need everybody to keep some perspective. Just because the bears put a couple of days together, it's not time to start, it's not time to start getting in the cave, and it's not. This is long overdue. It's not even. I think it's what, 3%. It's if that. No, it's not. It's not even 2%. This is profit taking. Bottom line, it's profit taking. And until some of these bigger areas get converted, you have to treat it as such. Otherwise, you're going to end up like everybody did on New Year's Eve. You're going to get caught here at a mid-band test over the tips of your skis, and then you're going to get squeezed into oblivion again. Okay? Don't get caught again. Don't get caught. All right. Everybody have a fantastic day. I'm going to start advertising for next week's public webinar. Tony Rago is doing an NQ webinar on all things NQ. And the last thing I'm going to leave you with is a hard pitch. If you trade ES and you trade it every day, or you're interested in learning how to trade it every day, you need to be in our room. Bottom line. It's a great group of people. It's a great place to learn. And, we'll teach you how to do it the right way. And, if you're going to learn how to do it, I can't think of many places better. Take a 2-week trial, see if you like it. If you do, great. If not, it's all good. Bottom line is, we'd love to meet you, and this is a good tape to start in. Okay, take care. Wrap up later. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook, and join us for a free trial at www.princetontrader.com. Trade them well.